All right, what's going on, guys? It's Tuesday, and yesterday the market basically had this huge panic, letting us go down, 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 down. At about 1 to 2 a.m. or so, we suddenly see this weird V-shaped recovery. Basically, the Dow was down 1,100 basis point, letting it even end in the green at about 99 points. Right now, the futures not really doing that well. But everything, all the indexes basically went all the way down, and then they had this weird ass rebound. But anyway, let's continue straight. I just got back home, so I'm just drinking some Monster before I actually have dinner later on. But let's go through some of the things that I'm actually looking at right now. Investor lose appetite for stock of unprofitable companies. I think I've said this a lot for quite some time as well. For people who do not understand, the reason why people don't like unprofitable company right now is because the risk level right now is way too high. You have inflation coming in, you have rate hikes to worry about, you have most probably better disruptive technology coming into various companies, various industry. And because of that, if a company is not already profitable in this current market cycle, you're going to get destroyed. Just look at Robinhood. Okay, Robinhood is a good company, not gonna lie, although they do have a bit of screw up back in the 2021's January after the whole Robin the Hood happened. I still think that Robinhood is still a good company. I also talk about Robinhood in the 5 stocks that I will choose for 2022. The reason why is because Robinhood honestly had a good profit and revenue model, personally speaking. However, they are currently not profitable, and that is the reason why you can basically see Robinhood keep on testing new lows. Even yesterday, hitting a low of about $11 or so. And for Robinhood, honestly, I think it is a still okay. But at the same time, yesterday I was a little bit worried about the market, which is why I still bought more puts on the market as well. Of course, I did buy the puts later to the end of the session where I'm able to actually see some sort of recovery, but I'm still a little bit worried of what Jerome Powell is going to be talking about in tomorrow's session. Okay, so tomorrow's session basically is going to be Wednesday and it's going to last all the way to Thursday, which is going to be our Thursday. And that's going to be when the entire Fed's meeting is going to be over and Jerome Powell is going to come out to talk about the entire press conference issue. But anyway, besides the point, investors losing appetite for stocks of unprofitable companies. The prospect of rising interest rates, like I said before, has especially hard on the Russell 2000 Small Caps Index. Which basically because most of the small caps are not really making money. If I would like to say, it would be 95% to even 98% of the companies are not making money. Okay, which is why in the Russell 2000 and also the small caps company, a lot of them like to use PE ratio for them to actually make a huge deal of it. It's gonna be like, oh, we are currently a 50 PE ratio company, we're a 60 PE ratio company. But right now, I think any company who is if any company is over 25 PE ratio, right, it's gonna be very, very dangerous. Unless you are a trillion capper, I don't care. If you're talking about smaller caps company, if you're anything over 10 PE ratio, I'll be worried as well. So I can see why the market kind of have this kind of weird sell-off on small caps, which is also why, just in case you guys have not watched it as well, I have the whole prediction for the stocks in 2022. Well, not just stocks, stocks and crypto in general. I did a prediction video earlier this year. At the first few days of the year, I actually talk about how small caps are basically going to be sideways trading throughout the entire year, and this is what I'm talking about. I also brought it to the attention that because of all these unprofitable companies, which mostly are all these small caps, they are going to basically get the full brunt of it. Yeah, companies making up 31% of the Russell 2000 were unprofitable as of the end of 2021. Okay, so the thing is that basically all of them are just unprofitable because they also take into account of how much assets they do have, and sometimes we also need to calculate cash burns in the company as well. So for us to actually consider it to be a net, inclusive of all your cash burn and such, you don't really have that many companies who are capable of doing so in the Russell 2000 itself. So yeah, okay, this is kind of boring. On the brink of war with Russia, Ukrainians are resigned and prepared. Okay, so let me just give you guys some so-called disclaimer kind of thing. Personally, I'm not someone who is super duper in depth into the politics of things. So whatever I'm going to be saying now probably shouldn't be taken seriously, because honestly, I don't even think that I am a worthy third party to even take into my ideas should not even be even taken into consideration for this. But I don't care about this war, okay? Because first of all, I think that Russia is not going to be a good so-called fight with Ukraine, and even if they do so, US is prepared to fight back, and US basically got nothing to lose from this. So chances are Putin is gonna say, you know what, I'm not gonna fight this battle because I got too much to lose. They will probably want to fight the Ukrainians instead of fighting the US. And chances are that's gonna happen. I won't really call it the World War III. A lot of people on Twitter are actually calling it the World War III. And I really highly doubt it. Of course, this does add onto the pressure in the market, because basically people are worried that, oh no, is it going to be a second Afghanistan situation? If this is going to be a second Afghanistan situation, then this might also add onto the plate of the whole political battle, especially for the next running season, which would be next year. Oh no, which will be the end of this year. We'll be going into the election cycle as well, and I think that will probably be a talking point for the Democrats and the Republicans the entire fight. So yeah, not gonna lie, okay, I'm not sure if whatever I'm saying even makes sense, because I'm not that deep into the politics of things. Don't think this is gonna happen, okay? But people are gonna be scared, which I think is very, very normal. And even for myself, I think the stock market has priced in a certain level of fear to this as well. So no idea. Okay, stocks future fall in wake of turbulence on Wall Street. I think this is very, very normal. Especially we have already seen the market, the pre-market. Okay, we know that the market is getting destroyed. Right now, I can assure you that half of the entire market is basically just, all right, you know what? Let's either sell positions or not do anything. Right now, I feel that the market is most likely going to do these two things. I would say more than half of the market actually. Either selling positions or holding all positions. Buying wise, I don't think as much. Probably people who think that this is already worthy of the dip to buy, then people will actually buy. But other than that, chances are it's going to be this too, simply because we do not know what the Feds are going to be doing. That's a huge thing. Okay. Of course, a lot of people are talking about how the Feds said that they are going to be raising rates after they finish the taper. Evidently, right now, we are not finished with the taper. So, by right, we are not expecting any sort of rate hikes in the meeting that's happening in a few hours. Okay. We are not expecting any sort of rate hikes by right. But the thing is that with so many analysts coming out to say, all right, we expect 4 rate hikes, we expect 8 rate hikes, we expect 6 rate hikes in 2022. Some even came out to say we expect 50 basis point increase instead of 25 basis point increment for every single rate hikes in 2022 and such. And that kind of bring a lot of fear in the market. But the thing is that the FOMC meeting has not really begun, nor has Jerome Powell actually weighed in on the fact that they are going to be changing that sort of things. So I feel that it's more like fear mongering by the analysts, especially from the Goldman Sachs and also JPM, because basically the banks kind of have more to benefit from a rate hikes. So if you actually think about it, how it actually works for a rate hike, when there is an increment of rates, the banks automatically win. There's no way for the banks to lose, because if the rates increase, basically the bank earns more. If because they are gonna be increasing the rates for whoever the consumer is, be it your business, be it your personal loan, your home loan, student loan, we don't care. It's gonna be increased. And because of that, the banks are the only one who wins. And I can see why Morgan Stanley, Goldman Sachs, all of them are basically coming out and say, all right, you know what, we are expecting 4, we're expecting 6, we're expecting 8, we're expecting 50 basis point. If I'm not mistaken, I even saw an article saying that they expect 75 basis point increment, which I think is bonkers. because of course, if we do get a 75 basis point increase, we're going to have a short-term pain. And by short-term, I do mean like maybe about 6 months of pain. And then afterwards, then we can immediately just go to the moon. Because if we do get this kind of 75 basis point increment, we just need like 2 or even 3 increase. And we're basically at the point where like inflation should just automatically disappear. But the reason is because this will be too much and it might possibly crash the real estate prices, especially in US. That's actually one of the reasons why I think they are kind of being a little bit more wary to increase rates, because they do not want to crash the real estate prices like back in 08. And I think that's kind of the issue here. But yeah, anyway, GE did report their earnings earlier. I have not read it because I literally just got home, but I'll be reading it later because I think GE is going to give us enough of a. I want to check out their forecast. I think the forecast is going to be important for most of the stocks. Okay, actually, you know what? I'm going to talk to you guys about this as well. All right, forecast. For people who still think that, earnings for quarter 4 is going to be important, it's not important, okay? Quarter 4 earnings is not important. After what Netflix happened, we don't care about the earnings for quarter 4 anymore. What we do want to see is forecast for quarter 1 of 22. The reason is because right now, even if we have a kick-ass quarter 4, which is the holiday seasons, okay? Usually, I'm very, very bullish on the holiday season, especially for your Amazon, for your firm, for your payment, your fintechs, for your cyclical. All this, I think holiday seasons usually do very, very well. But the issue is because right now, the entire market don't really think that a good earnings report is going to do anything. Because right now, what we are more forward-looking on is the forecast. If the forecasts are going to be horrible, so for example, if a company, let's just say company ABC, okay? I don't want to just think of any company and give you guys some false information, but let's just say company ABC, okay? Company ABC currently has a revenue of about 20% increment of growth year over year. And then right now their forecast for quarter 1, they suddenly say that, all right, we think that quarter 1 we're only going to grow by 4%. Okay, from 20% drop down to 4%. Now this simple forecast, but mind you, okay, because let's just say in quarter 3 they had 12% revenue growth for year over year, 12%, and then for quarter 4 they realized we can do 20. We are doing 20% year over year. But then in quarter 1 suddenly it dropped to 4%, which basically is kind of telling you that, you know what, the next quarter is going to be horrible, and we need to cut a lot of expenses. We need to cut a lot of cash burns that the company is going through, such as be it employment, be it your R&D, be it any sort of marketing and administrative stuff, where they have to kind of just cut up all those expenses for them to actually reduce the cash burn for the company to hopefully grow in the longer run. And that's kind of the issue where we saw in Netflix, where you suddenly see a decrease in forecast for the revenue growth and also the subscriber count or the subscriber forecast, where they actually dropped by like 53% or something ridiculous. And because of that, right now, what we want to see are forecasts. We don't really care about all your earnings in quarter 4. Of course, it's going to be important to a certain extent, but I still think right now in this market, especially right before the Federal Reserve actually comes out, good earning will basically force the Federal Reserve to become slightly more hawkish. So imagine this scenario where we actually have this environment where every single company basically beats their estimate by like a good 5 to even 10%. Okay, every single company. So everyone is doing exceptionally well. Okay, the Federal Reserve will basically just sit back and think, okay, our S&P, everyone is doing well. Dow Jones, everyone is doing well. Even Russell, everyone is doing well. If that's the case, we can increase rates. And now that 75 basis point doesn't sound too ridiculous, because the thing is that right now, the market is so frothy. Everyone is doing well. The public market is booming. Time to increase rates. A hawkish Fed. and we do not want to see a hawkish Fed. So good earnings become bad earnings. Now let's take another scenario where we have bad earnings, which is what we have basically been seeing right now. Okay, bad earnings. If you were to suddenly see a company that is supposedly doing 20% growth suddenly drop to 4% growth in the next quarter, what are you going to think? You're basically going to think, oh no, like this company that I currently have a 60p, that I have currently a 40p value on, is going to go to 60p value simply because they're not going to be doing as much. And now I have to kind of rethink my strategy. Do I DCA more into the company after that bad earnings, or do I just be like, all right, you know what, I'm out of Netflix. But I do think that Netflix is still a good company after all. Okay, like by no means I'm not trying to like smash on the company, because I do think that Netflix at the end of the day, I can see the consumers being a pretty good numbers at the end of the day. I do think that there's some form of growth related to the company as well. I do see good things for Netflix at the end of the day. So personally, I'm still not being an investor in it, simply because I do want to have more information, especially after the FOMC meeting, which is kind of why we are all just kind of looking at it. Okay, but anyway, finish with the earnings talk. Okay, so General Electric fell 6% in pre-market, trading after reporting a fourth quarter loss of $3.8 billion. So honestly, for me to see this GE drop, I feel that it's kind of doesn't really affect me. First thing is because I'm not in GE, and also secondly because GE just did the split in company where they split into 3 different industries. So I probably have to go and read up on that before I can actually give you guys any sort of proper information. Market volatility has spiked in recent sessions, which we saw this yesterday. Okay, if you are following me on Instagram, which if you are not, right here, okay, follow me on Instagram right here. I post on the story when I see live updates, and I kind of don't want to just upload a video, so I just upload a story for you guys to see. I literally said that the VIX is at a superbly high level at 38. Okay, the last time we hit 38 was, I think, November of 2020, where basically we had the first wave of Delta. That was basically when we had peak fear. And then the one before it will be the pandemic start, which would be sometime in, I think, it was definitely March, and the VIX was at about 58. So put that into a context. We were at 38 yesterday, and the peak of pandemic was at 58. So we're not even 50% away, and that's kind of scary for us to really see market volatility go that high. Okay, investors grow anxious about how rapidly the Federal Reserve will act to combat inflation by raising interest rates and shrinking its balance sheet. So yeah, I think the balance sheet wise, I think we all already expected the balance sheet, which is why I said, we do see a lot of drops, especially since Thursday, Friday, and also Monday. But at the same time, fundamentally, I don't think anything really changed. I don't think the market suddenly priced in something huge. It's not as if there was any new information that suddenly scared the market away, where they feel that, oh no, we should not do this, we should sell everything, that kind of thing. Of course, I do think that Netflix earnings definitely did spook a lot of investors in terms of how, because Netflix, after all, is also in the FANG, which is FAANG, which is like the top American tech companies, and I can see why having a bad forecast kind of throwing some sort of foreshadow for a bad quarter for the entire tech industry in general. So yeah, I can see why. But yeah, market whipsaw Monday with the Nasdaq declining as much as 4.9%, okay, before rallying to a close of 0.6% higher. You have any idea how crazy everyone's portfolio was yesterday? We literally saw everything just go down, 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 down. And then we started seeing up, and it was crazy because it was literally like a V-shaped recovery. So it was quite insane for me to actually go through the entire market looking at that. And yeah, you can basically look at the VIX right now. So over here, this huge spike here is when Delta was happening. And then over here, this is also, well, you already know what it is. Oh wait, no, this wasn't Delta. This is 2021. This was Omicron. So when Omicron first came out and then it had like huge spreadability, this was the fear that was happening. So this was Omicron. The one before it was Delta. So yeah. Earnings beat analysts forecast were source. Okay, so this makes a lot of sense. Okay, so while earnings in 2021 regularly beat analysts forecasts and was a source of strength for equity markets, recent results suggest companies are beginning to struggle with inflation and slowing economic growth. Okay, and that's what I'm talking about. Forecast. We are talking about the projection, economic projections for the entire company, be it the next quarter or the next year or so. Right now, people are more concerned about the future than they are about the past, because basically earnings are talking about the past. We already done the earnings and then we're reporting the earnings to you guys. That's how earnings works. But right now, people don't really care about what you have done. People want to see where will you be going. And I think because of that, this might actually possibly even form some sort of bubble, because people can basically just be like, you know what, I think that we can actually do very well. Of course, I don't think that's very, very possible, since there's a lot of auditing that actually happens behind the scene as well. But yeah, I'm not very sure how we will actually go through this entire thing. We have gotten so used to this cycle of companies blowing the roof off of earnings expectation, but so far that is not happening. So yeah, nothing interesting, I guess. Okay, Bloomberg. Yeah, GE misses sales expectation in setback. Yeah, I think that this is very normal for GE to miss the first earnings. Honestly speaking, I'm not even sure about the earning report, but I'll probably be reading that after I have my dinner and shower, I guess. It was below the 21.4 billion average of analysts. Wow. Okay. So they missed by like $1 billion or so. That's $1 billion out of your $20 billion. That's about a good 5% miss. Okay. Yeah. Okay. I mean, nothing crazy, I guess. I will have to properly go and read that before I can. All right. Strategists predict trouble for US stocks after massive U-turn. While positive turnarounds are often viewed as a good sign, it might not be the case here. According to calculation by Bespokes Investment Group, Monday was the sixth time since 1988 that the Nasdaq erased a 4% plus intraday, declined to close a higher on the day. Okay, so I actually read an article about this where they said that basically the Nasdaq dropped 4% intraday, and every single time that the Nasdaq dropped 4% intraday and then recovered every single thing in that same day. Every single time that this sort of phenomenon happened, it was always a bear market, and people are technically trying to fit one and one together and just say that we are in the bear market. But honestly speaking, I feel that right now the SPY is still at near all-time highs. Dow Jones is also near all-time highs. The Nasdaq is also near all-time highs. I really don't want to call this a bear market, but of course at the same time, we probably saw the same signs that we did back in 2008. Just that we always thought that we are really we are not really that far off from the tops, and that's why we can continue to kind of just prop up this entire market. So I think that of course it's better for us to kind of just assume that we're in a bear market, but we'll just see how it actually goes later on. But yeah, I think I basically just talked about this because all these are things that I actually talk about. Clown stocks to fall 90%. Okay. It felt like a near-term bottom. The Fed meeting this week is probably an upward catalyst. All right, so this is what I mean. Right now, the thing is that the entire market is right now very, very bearish about the entire FOMC meeting because they think that Jerome Powell is going to suddenly just raise rates tomorrow. Okay. Personally, I was actually 0 to 100. I think that it was 0% chance for Jerome Powell to increase the rates tomorrow, because it almost makes 0 sense for Jerome Powell to say, we will not be raising rates until we finish tapering. And right now we have not finished tapering, okay? Unless Jerome Powell want to go U-turn on whatever the hell he said, I don't think we're going to be increasing the rates. However, I think because of so much fear that's happening right now, it's more of a 60% to 40%, where 60% thinks that, yeah, we think we might actually see a rate hike. I do not know where this 60% even came from. I think a lot of people are just basically kept on reading the news, and we just kind of let fear consume us. We think that the market has not really priced this in, which I think that the market already priced this in. Okay, and because of that, I feel that, like what this article said, the Fed meeting this week is probably an upward catalyst. I really think so, which is why I'm not selling out of anything, because I feel that, at the same time, we might basically see a dovish Jerome Powell and still continue on with the entire market. And I think that would be a very, very huge possibility at the end of the day. So I don't really want to be so bearish on a lot of things. Of course, I do have puts on multiple stocks. Basically, all those puts are just for me to sort of earn a little bit of money by the side. I'll probably be closing those puts either today or tomorrow before Jerome Powell actually comes out to talk. But yeah, those are probably what I'll be doing anyway. So, unwinding leverage. Okay, there's no question that the ride has been a wild one recently. Today, bounce was an impressive one, and we did see some signs of capitulation at the midday lows. The volume was strong, and breadth was very negative. We did see signs of forced selling, like margin calls. This should allow the bounce to last for more than just a few hours. So basically, these are just saying that people who are already in the market are actually too deep into leverage, and that's the reason why we have been seeing this sort of bounces, especially in the Thursday, Friday, and Monday session. And yeah, basically they are saying that chances are people, the reason why we had the first AM of the decrease where the Dow was down 1,100 basis point was because it could actually be because of margin calls, which I think is very, very possible. We have seen how margin calls can affect, like, look at Bitcoin, look at Ethereum, they got destroyed. Okay, they are down like about 50% from their all-time highs. It's actually ridiculous. And a lot of them is actually from leverage, and I totally understand why. But even in the stocks market as well, so I can definitely see forced selling being an issue in the market. So yeah. Head fake. S&P 500 today really rally on Monday was a head fake. Basically a dead cat bounce. The index completed an almost perfect intraday inverted head and showed us to end the day about flat. Okay. But none appear to be in the offing. They included a dovish Fed pivot that lowers the 10-year tips. Yield bottoming in the US manufacturing PMI and bottoming in the S&P 500 quarterly EPS beat minus misses, which has faded since third quarter. So I haven't really read on the PMI yet. I'm pretty sure the PMI came out like 2 days ago, but I haven't had time to read that. I'll probably go through that as well later on. But yeah, basically, boring, I guess. Nvidia quietly prepares to abandon a $40 billion ARM bid. Okay, I think this should be my last news. I don't want to make this go over 30 minutes. But anyway, abandon $40 billion ARM bid. Isn't this like an IoT company? I think so. Cloud service, yeah. Cloud service IoT, yeah, okay. Yeah, I remember something along this line. I remember reading this. Yes, and they didn't have any sort of progress. It was like a company under SoftBank and such. And then we got no news after that. To no progress, the winning approval of $40 billion chip deal. Doesn't expect the transaction to close, according to one person who asked not to be identified because the discussion were private. SoftBank, meanwhile, is stepping up preparation for an ARM initial public offering as an alternative to NVIDIA takeover. Okay. I mean, honestly speaking, right now, IPO, I wouldn't really be looking into IPOs anyway. Right now, IPO is so dangerous. I wouldn't even bother looking at IPOs right now. So yeah. Anyway, that's all I have for today. I'll see you guys tomorrow. Tomorrow is going to be FOMC meeting. Of course, the meeting is going to take all the way to the 3 a.m. So I'm still going to come up with the daily news. And then afterwards, I will then create another video talking about the entire FOMC recap. And then I'll post it on probably right after I finish recording it. But yeah, anyway, tomorrow, the video for the 5 cryptocurrency that I'll be holding into 2022 is going to be out. So stay tuned for that. But anyway, thank you guys for watching, and I'll see you guys tomorrow.